Here's a summary of Adobe's Q3 FY25 earnings call, designed for clear and concise delivery. Introduction. Good afternoon, everyone. Today, we'll recap Adobe's strong performance in the third quarter of fiscal year 2025, highlighting key financial achievements, future outlook, and strategic initiatives, particularly around artificial intelligence. Key financial metrics. Revenue. Adobe achieved a record $5.99 billion in Q3 FY25, representing 10% year-over-year growth in constant currency. Earnings per share. EPS GAAP diluted EPS was $4.18. Non-GAAP diluted EPS was $5.31, a 14% year-over-year increase. Digital media. This segment reported $4.46 billion in revenue, with ending ARR growing 11.7% year-over-year to $18.59 billion. Digital experience. This segment generated $1.48 billion in revenue, with subscription revenue at $1.37 billion, up 11% year-over-year. AI-Influenced ARR. This significant metric has now surpassed $5 billion, exceeding the full-year target ahead of schedule. Cash flow. Cash flow from operations reached a Q3 record of $2.20 billion. Management's forecasts. Future quarters and full-year. Adobe has raised its full-year targets due to strong momentum. Q4 FY25 targets. Total revenue. $6.075 billion to $6.125 billion. Non-GAAP EPS. $5.35 to $5.40. Full-year FY25 targets. Total revenue. $23.65 billion to $23.70 billion. Non-GAAP EPS. $20.80 to $20.85. Significant risk factors. While not explicitly detailed as risks in the prepared remarks, the following implicitly highlight areas of focus and potential challenges. Competition in AI, the rapid evolution of generative AI models, and potential integration into advertising platforms by competitors like Google and Meta could impact Adobe's market share, especially for single-channel marketers. Shifting advertising landscape. Changes in how consumers discover brands through generative AI search necessitates ongoing adaptation of marketing and customer experience strategies. Intellectual property concerns. Enterprise clients are increasingly focused on the commercial safety and IP implications of AI usage, a key area Adobe emphasizes. Highlights of the quarter. AI as a tectonic shift. Adobe views AI as the biggest opportunity in decades, focusing on integrating it across its leading applications and launching new AI-first products. Firefly and GenStudio momentum. Strong adoption of Firefly, including its standalone subscription and integration into Creative Cloud Pro, is driving growth. GenStudio components now exceed $1 billion in ARR, growing over 25% year-over-year. Acrobat evolution. The introduction of Acrobat Studio, featuring PDF spaces and AI Assistant, is reshaping document productivity and consumption. Acrobat and Express combined monthly active users grew approximately 20% year-over-year. Creative Cloud Pro adoption. Strong migration to the Creative Cloud Pro offering, which includes Firefly, reflects the perceived value of integrated AI. Enterprise wins. Significant customer wins across various industries underscore the demand for Adobe's integrated solutions. Educational initiatives. Partnerships, like the one with the state of California, highlight efforts to equip students with AI-powered creative tools. Lowlights. Implicit, no explicit, lowlights were mentioned. The focus was consistently on strong performance and strategic advancements. Most important statements from CEO and CFO. Shantanu Narayan, Chair and CEO. AI represents a tectonic technology shift and presents the biggest opportunity for Adobe in decades. We've done a great job executing this strategy by accelerating innovation with a focus on offering greater value to creative and marketing professionals and business professionals and consumers. Adobe is the operating system for creative work. Given our customer-focused growth strategy, product innovation, and strong go-to-market execution and momentum in our business, we're pleased to once again raise our FY25 revenue and EPS targets. In my interactions with companies around the world, it's clear that they're investing in Adobe as their mission-critical creative AI technology partner. Dan Dern, Executive Vice President and CFO. Today, I'll start by summarizing Adobe's performance in Q3 fiscal 2025, highlighting growth drivers across our businesses, and I'll finish with our targets. In Q3, we exceeded our targets and once again delivered double-digit top-line and EPS growth. Adobe AI-Influenced ARR surpassed $5 billion, and we expect it to continue to rise as a percent of our business. Based on our momentum, we are pleased to raise our media ending ARR growth target, and given our Q4 targets, we are raising the full-year total revenue and GAAP and non-GAAP EPS targets. In summary, Adobe's Q3 performance demonstrates strong execution in an AI-first world. Our focus on product leadership and customer-centric innovation positions us to deliver durable and profitable growth. Conclusion: Adobe delivered a very strong third quarter, driven by its strategic focus on AI integration across its product portfolio. The company is well-positioned for continued growth, as evidenced by raised full-year guidance and positive customer adoption trends, particularly in the enterprise segment and for its AI-first products. Adobe remains committed to delivering innovation and value to its diverse customer base.